Hey, good morning, everyone. Clint Thomas here with RKN. We have a couple of really great updates in the last week or two that have come down the wire that will help a lot of folks with their taxes. First one is the IRS has now released an update saying that due to all the changes with the tax code this past year and some of the confusion, I guess, that was inherent in some of the regs that were laid out related to the qualified business income deduction, that new 20% pass-through deduction that helps S corps and partnerships and Schedule C sole proprietors. They have actually now waived the penalty, the underpayment penalty. Normally, it's, as long as you meet 90% of current year tax or 110% of prior year, then you're good. But this year, they've actually waived the penalty as long as the taxpayer has met at least 85% of their current year tax. So for those who were sort of on the bubble and they were pretty close and they did the best they could, the IRS has been a little generous here this one year for those who have fallen short of their estimated tax payments combined with their withholding and total payments in for 2018. As long as you've met 85% of the current year tax, then you can avoid underpayment penalty, which is great news. The other great thing that they announced, Treasury came out with a safe harbor regulation to clarify some of the ambiguity as part of the law for rental activities, whether they qualify as trade or business activities under this new qualified business income deduction as well, the Section 199A deduction, the 20% pass-through. Rental activities were a little bit gray as far as how we were supposed to classify them, and so they've actually released a safe harbor, which gives us some idea of how they're thinking. The safe harbor provision basically tells us that, listen, if the taxpayer or one of their employees or agents, so that to me would imply even a property management company, as long as a taxpayer, employee, or agent is incurring at least 250 hours per year on that rental activity, and going forward after 18 they have contemporaneous records and there are other qualifications, then you could classify safely under the safe harbor the rental activity as a trade or business. And of course, if you have profit in that activity, then you can take advantage of the new qualified business income deduction, subject to all the other limitations that are inherent therein. So that's great news. For those who don't quite meet that 250-hour requirement for some reason, there's still determination of trade or business under the normal way of kind of a facts and circumstances case. There are many court cases on both sides of the issue of whether an activity represents a trade or business for tax purposes. The one thing that they did specify in the safe harbor is that if you have a triple net lease, you will not be a trade or business, where it's very, obviously passive by default. Rentals are passive by default unless you can accept out. So I won't go into all the details there, but so two new things: the safe harbor on trade or business definition for rental properties under the new 20% pass-through deduction. That's really a big benefit. And then also the waiver of the underpayment penalty as long as you have met 85% of your current year tax. So those are just a couple of things, updates in the last week or two, and hope you guys have a happy Friday. And here at RKN, we are guiding you forward. Have a great weekend.